Hi, this is Joe Rabil with Rabil Stock Research. So in the past, I've talked about MACD, and I talked about its ability to be both a momentum indicator as well as a trend indication. But what I want to do today is really just focus on 4 different patterns. These are the 4 patterns that I talk about in my book and my courses. I think if you can get these down, it can really add some value, especially when you learn how to use them in multiple time frames. So we're going to do that. We're going to also cover a few of the indices. We're going to go through Bitcoin. We're going to look at some sectors and look at the relative strength of some of the sectors and some of the improvement and where they're coming from. And then we'll go through the symbol requests that came through. Let's go ahead and get started. Okay, so I've got my 4 time frames up. Let me just make sure everyone's on the same page. I've got a monthly in the bottom left. I've got a weekly in the bottom right, a daily in the upper right, and then an hourly in the upper left. Now, one of the things that I do when I'm looking at multiple time frames, not only do I start here and work my way this way, but there's something else that is very important that I talk about in my book, which is I want to have the same amount of bars. I mentioned this last week, but I want to explain it a little bit deeper. So we've got 4 time frames with approximately the same amount of bars. So when I look at a chart like on this monthly chart, all right, I can see what's taking place, and I really could take the time frame off because what I'm looking at will completely transfer to any time frame. This could be a 2-minute chart. It could be a 10-minute chart. It could be a yearly chart. So I want to look and make sure that when I look at a pattern, it has the same setup no matter what the time frame is. And what I think that's done for me is allow me to get a lot better much more quickly. So I can see the different setups no matter what the time frame is. All right. And I hope I'm getting this across well enough, but it will do a lot for your chart reading if you have this same setup in different time frames. The other thing that it's going to do is it really be very helpful in determining how to find confluence amongst different time frames. It's a tricky thing that I teach in my course, learning how to use one signal on one time frame and a different signal on another time frame. So wanted to make sure I got that across and spent a few more minutes on it. But having the same amount of bars in each time frame will go a long way to help with your chart reading. All right, let's just look at this. So as we go through, I wanted to point out the 4 things that MACD, there's 4 different patterns that I look for in MACD. And I'm going to start with the monthly chart, and we can see this little pullback. We got to move to the upside, and then we got a little, you can call it a pause. You could call it a pullback. You can, a little check back to the moving average after we cross back above. Now, sometimes it'll happen in an uptrend. We'll get a little check back, but I refer to this as a pinch play, where the MACD itself is pinching in to the signal line, which has slope to it. I prefer it to have slope. Now, it won't always have slope. Sometimes it'll happen at the top and sometimes it'll happen at the bottom, but it is really nice when we have some slope to this line. It's almost like a trend line of the momentum. We know that the trend is up when this is rising on the momentum. So if we can get a little check back, a little pinch, based on price, we want to see at least a couple lower highs. If we have that, then I think we have the potential. Usually, I just look at it as a potential 2 to 4 bar move. Now, if that's going to happen on a monthly chart, we can go down to a smaller time frame and play for the next 2 to 4 months, knowing that we've got some strength. Now, if there's ADX strength behind it, it can turn into a lot longer type of a play. All right, so that's one, is the pinch pattern. All right, the second one I'll talk about is on the weekly chart, and we can see what happened here. We had a pullback. So price goes to a new high, it pulls back, and then we go to another new high, and then we pull back again. But if you notice, this is actually making a higher low. So we've made a low here, and then we made a higher low here with this reversal bar, okay? But look at what MACD did. MACD actually came down and made a lower low. So we can see that the MACD came down and kind of was in agreement with this. And then as it pulled back here, it was in disagreement. That's divergence, where one is showing different than another. So in this case, instead of making Their standard divergence is where price makes a lower low and MACD makes a higher low. But in this case, we're doing the opposite, but it's still a divergence signal. And I like this because it happens in the direction of the long term or the bigger trend. So if it happens near the 40 or it happens near the 18, I really like to look for this pattern. So we've got that setup taking place that has already basically resulted in a pretty good move from that standpoint. Now, another pattern I like to look for is a divergence signal, which is a standard divergence where price goes up, it pulls back, and it makes a higher high, clearly makes a higher high. And if you notice here, instead of this making a lower low, it just makes a double top. But look at the difference. We made a significantly higher high here, and we're just making a double top here. All right. I still consider that to be a divergence signal, sign of difference. Okay. That's where divergence comes in as opposed to being in agreement. There's a difference there. And whenever we have that, we're looking for some kind of a pause or a pullback. Now, because this is going counter trend, right? We're in the trend is up and we're looking at momentum slowing. We shouldn't necessarily look for a reversal in the price pattern. In this case, that happened, but in a lot of cases, all it'll mean is a pullback to check back to either the moving average support, the trend support, or the price support. So don't expect too much from these. A lot of times I think people believe that they're at the start of a big reversal. And if you get really far away and a stock has been going up for a long time or a market has been going up for a long time, it can cause a reversal in the overall trend. But I tend to think more when I see MACD divergence like this, we're just looking for a pullback or a pause. All right. Now, I'll show you another version of that because I'm going to show you on the hourly. We have a move to the upside here, and then we get a pause, and then we go to we make another push to a new high, and this makes a lower high. So this is more of what we look for when we're expecting some kind of a divergence. Now, this is, again, the result isn't necessarily this big downward reversal. It's more of like that was the end of the move. So we have this strong move to the upside, and then the divergence tells us that we're probably ending that and we're going to go through some kind of a pause or a pullback, but it doesn't necessarily mean reversal. Now, if you notice what's taken place, we've had a little bit of an ABC correction, and MACD has worked off the overbought condition that was in place, and it's worked back down to the zero line. So this is a potential zero line reversal. That's the other signal we want to be on the lookout for. If this can turn up here in this range, somewhere in here, we have a reversal at or near the zero line, something very important, constantly looking for. All right. Sometimes they just come in the form of a rally and reversal, maybe sometimes with a little overrun. And then other times they come in and they kind of settle in and they make sort of like a double top or a double bottom right at this line. Very important to watch for, especially when we're getting an ABC correction when the bigger trend is to the upside. So let me just show you this with the daily, because the daily right now is making a move to the upside and it looks like it's starting to pinch a little bit. All right. You see how the MACD is pulling back or pausing while the slow line or the signal line is rising at a slow pace. So this pullback is forming a potential pinch, while on this time frame we're forming a zero line reversal. This is the type of combination and confluence you should be looking for when you're using MACD. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. As always, my comments are for educational purposes only. Please do your own due diligence before making any investments. All right, so I've got my grid up, my all 11 sectors on here, and what I use is I've got my 18 and 40 simple on each one of these, plus I have the relative strength line versus the S&P. I call it a relative performance line. And then I've overlaid a 30-period simple weekly moving average. All right. Now, what this does is it gives us a real sense of if there's an emergence of improvement or deterioration in the relative performance. And I think this is really crucial when you're looking at sector performance, or if you're comparing one index to another one, right? So we want to just keep an eye on these things because I think it can help us, especially when we're doing top-down analysis. All right. So we can see the areas that are showing the most improvement. It's sort of interesting. We've got the financials as one. All right. We've got the consumer staples as another. We've got the REITs as another. We've got the XLU additionally, as well as the healthcare. So we've got this combination of both, what I would consider to be interest sensitive sectors as well as more defensive areas. All right. So, that could mean something. It might not mean anything. Some of these are a little on the early side. We don't have confirmation. One of the things I really like to look for is for the moving average to turn to the upside and confirm. All right. We're getting close. We haven't really done that in any of these really. Maybe the utilities has actually turned to the upside. That's about the only one. Now, the other thing I want to mention here, and I wanted to focus in on this for a second, is we do show some deterioration on a relative basis for the XLK, right? The technology. However, we don't have true confirmation, in my opinion, in terms of like a real damage being done. And the reason is that we got price action still in pretty good shape. These moving averages are still rising and price got right back above them. So what does that mean to me? I mean, what I'm looking for are patterns where we get a agreement. We want price and relative strength to be in agreement on one direction or the other. And this is showing deterioration on a relative basis, but not on a price basis. I don't really consider this to be damaged on a price basis. So what that would tell me is that this is probably short-lived unless we see real deterioration in the price over the next week or two. I wouldn't necessarily be thinking that the relative strength is telling us there's a big drop coming in technology or something like that. Same with the XLC. The XLC's price pattern is still very, very strong, even though there's some signs of deterioration in a relative performance. All right. So we just want to keep an eye on this. I think every couple of weeks, I want to make sure I cover this part of using this grid. I think can be very helpful. All right. Now, let's look at the QQQ. I want to start with this, again, because of what's taken place and how this is handling this move. So if we look at technology and then we look at this, we can see that we had a pretty nice drop and we've gotten a really good rally without causing these moving averages to roll over. In the process of doing that, this is making a higher low while this is making a lower low. We've got reverse divergence in place. All right. And then finally, we have the relative strength showing signs of deterioration. Let's just zero in on this for a second. So we've got this developing, but we don't really show confirmation on a price basis. So if we're looking for something that's really going to cause a big drop, we're going to need to see price and the relative strength kind of be giving us be in agreement, so to speak. All right, kind of like what we saw on the way up. When this turned to the upside, we had confirmation on a relative basis. That was a really good sign of follow through to come. All right. So we're looking for the same thing. If we're looking for deterioration, we're going to need both as well. Now, I do like the way this is pausing here right now, but just realize NVIDIA is going to be coming out with their earnings. This is probably going to get some movement one way or another. So far, so good. But if we break the 18-day here, then you got to start thinking that we're in a trading range. All right. So that's something we want to be on the lookout for. I don't know that I would jump the gun on this. I would probably wait for the earnings to come out and see if we get a move in the QQQ back up through this prior high area for around 480, something like that. I think that would be a really bullish sign. Okay, IWM. Again, I'm waiting for this sign of relative improvement. If we get that, I think based on the way this base is formed, I think we're going to start to see a lot more improvement on the small cap arena. More stocks participating, and this is a huge base that's formed on the monthly with the MACD turning. I would tell you this, that I don't know if this is going to go up or not, but if it does, I think it could make a pretty decent move. All right. But we want that relative improvement, because if this just goes up and we don't get the relative improvement, then we know that it's being pulled up by the general market. That's not as bullish. All right. That's not as bullish scenario. We need to have that relative performance line really kicking to new highs here to confirm. All right, let's look at Bitcoin, because I really like the way this is developing. So we had this powerful move to the upside. How do I know it was powerful? Well, I can look at both the MACD confirming to the upside, hitting a new high with price, and then also green DI causing this ADX to climb well above 25. Remember, we get a reset. We don't look back and compare to these back here, because we reset when we go to a zero line. We get under the zero line. We get under 25 in ADX and get low. And then when we get under the zero line or at it, we want to reset this and start over. So this is actually a really strong move, even though MACD isn't at a new high. We've got really good strength. And then the last couple months, we're starting to get these tails formed, showing that there's support underneath. Now look at the weekly chart. Look at how this has formed this little corrective pattern and letting the moving averages come together. MACD is working its way back to the zero line, while the ADX is getting lower and lower each week. This is a really healthy correction. This is likely prepping for a new move. Now, if we were to turn from here and work our way up through 65, I would say that would be the buy signal. I think it might be more likely that it spends a little bit more time consolidating, and then we'd want to see, a break of this trend line. Either way, you'd want to see the break of the trend line, but I would be willing to maybe pre-guess this a little bit, because we had an undercut and rally pattern. I think if we get back above this 65 level, I would say that would be go time. All right. Now, if that doesn't happen, then let's just draw our trend line in and watch for this next breakout. All right. I do want to keep an eye on the 10-year Treasuries yields. All right. Because you can really see where this has broken its 18-month line, and that line is rolling over. MACD is turning back down. So there's agreement here. There's no divergence. They're in agreement. And we're also getting a contraction phase confirmed in the DI lines. Now, that's on a monthly chart. That means we likely have a few months, 3 to 6 months of this pattern developing, where we might have some downside risk, but more importantly, the upside, the upside in rates, I think, is over for now, and we could work our way down a little bit lower. But more importantly, I think we're going to spend some time really consolidating and really digesting the gains that they made from this very, very low level. So I think that's a positive. It could be a positive for some of these small cap stocks. So, all right, let's look at this Amazon, because we want to continue to keep an eye out on these big names, these big 5 to 10 stocks. So I didn't get a request for any of them this week, but I want to make sure I'm just kind of always focusing in at least on one of these each week. Now, look at how this is deteriorated on a relative basis. All right, now that's not the end of the world, because we can draw on our trend line here. And again, look at the way this is played out. We lost it on a relative basis. Like we've had some deterioration on a relative basis, but look at what this did on a price basis. Look at the reversal at the 18-month line. We're getting a nice tail forming at the 18-month. We still have a pretty good looking momentum condition on the longer term time frame. So I put this as a corrective pattern as opposed to the start of some big decline. I think this is setting up a correction it's going to end up leading to new movement to the upside. All right. So one of the things you notice is that we had the gap down on earnings, and we now filled that gap, and now we're coming back down. So we're going to need this to come back up through this key level here. Very key level. If we work our way back up through that, then things are improving. And lo and behold, that level is actually the 18-week, which it failed at. If we get back above the 18-week, I think we got to have starting a lot more respect for this Amazon. All right, I want to go through some requests that came through. We had a pretty big drop in this IonQ. It's below the 18-month. Now, I do like what's going on the weekly chart. I'd like to see it turn a little bit here, and we're going to need to see green DI break out on the turn. If that happens, then this is this is starting to be in play on a short to intermediate term basis, not really on a monthly, not really on the longer term time frame until we get through this 10 area. We're going to need to get through that, I think, before anything meaningful is going to happen. But we could get some setup. If there's really good dynamics behind the turn, that could be very, very interesting. Okay, Poet. So, yeah, I mean, I like the way this is turning, but look at how this has played out. We've essentially rallied our way back towards a declining 18-month. I do like the volume pattern. I do like the fact that green DI is showing signs of improvement, but it has been helped by the big spikes in the DI. You see these little spikes on the candles? So that's making the DI look a little bit better than it actually is because there's a little bit of selling involved in this move. I really want to see this get through the 18-month, and then I think this is really in play. I mean, you could play this if we turn up from here. You could probably try and play this as a signal, but I want to see confirming daily higher pivot low and maybe even taking out this prior level here. And then I'd probably be willing to play it off of a weekly daily. And if that happens, then we could see continuation on the monthly. I mean, it's very close. It's just I'd like to see a little bit more confirmation. Now, I really like what's going on in this PayPal. We're finally getting through the 18-month line for the first time in eons, and we already had. If you notice, we were going to new lows, but the MACD was not. So we already had some signs of momentum divergence based on the MACD. And now we're starting to kind of click in with a little bit of a pinch play on the monthly, but the weekly is really what's got me intrigued. We're getting green DI breaking out, and that's causing the ADX to move. We got good volume associated with it. We're getting back above this key highs here. We need a pullback to hold the 18-day. I would say would be my interest. That's where my interest comes in. Now, Roblox, RBLX, this is one we really want to be watching. Look at this long base, sideways basing pattern. So I'd call this late stage one, right? We've been, stage 4 was the decline, stage 1 is this base. Now we need this to emerge, but we've done all the work. All the prep work has been done. I think if this gets through 50, it's really going to kick into gear. You could jump the gun a little bit if you wanted, just based on the overall pattern and the fact that it held the 18-month line. You could do it ahead of that if you want. Maybe if we get another little higher low, pull back to the 18-day, we're showing some pretty good signs of improvement on a relative basis. WPM, nice looking base. Look at the base on this. So this has been going sideways for years, 3-4 years, and we've got improving DI again. You see how the green DI kind of went on a breather here, and now it's turning back to the upside, and we're back above this key resistance zone, and we're holding it with new improved momentum. Watch for a pullback towards 60. See if this can make a higher low around 60, and I think that would be kind of like the next buying opportunity. Thanks for watching the show today. If you have any stock requests you'd like me to analyze on next week's show, you can put it in the comment area below, or you can send it to stocktalk@stockcharts.com. Also, if you have an interest in learning more about some of these techniques, I would go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.